Market overview snapshot. Equities increased, treasury values decreased, crude oil prices rose, the dollar remained stable, and gold prices increased. Prior session. Discussions between Trump and Xi are scheduled for next Thursday. The U.S. might investigate China's adherence to the 2020 trade agreement. Macron is advocating for the EU to utilize its most potent trade tool against China. The U.S. has imposed sanctions on Russian oil companies. Chinese oil companies are reportedly pausing purchases of Russian oil. The U.S. is considering investments or funding in quantum computing. Japan's Rengo is aiming for wage increases of 5%. There was a weak 5-year TIPS auction. Tesla, TSLA, earnings were weak, but the stock recovered from its losses. Upcoming data. Japanese CPI, September, UK retail sales, September, Eurozone, UK, and US flash PMIs, October, US CPI, September. Suspended releases. U.S. building permits, September, U.S. new home sales, September. Events. CBR policy announcement, European Council, 23rd-24th. Credit review, Moody's on France. Speakers, RBA's Bullock, ECB's Cipollone and Nagel. Supply, Australia. Earnings, NatWest, Porsche, Sanofi, Eni, Saab, Procter & Gamble. Market wrap. U.S. equity markets strengthened on Thursday, reversing Wednesday's declines. There was no specific catalyst, and equity futures had been rising since the start of European trading. Electric vehicle manufacturer Tesla, TSLA, fully recovered from losses incurred after hours on Wednesday following its earnings report, which was initially poorly received. Healthcare stocks experienced downward pressure after Molina, Mo, reduced its profit forecast due to rising medical costs. Quantum computing stocks were bid up on speculation that the U.S. was considering equity investments. Later, Yahoo Finance reported that the administration is not necessarily considering taking equity stakes, with sources stating that companies have approached the White House with proposals, but any potential investment, possibly via warrants or loans, would aim for taxpayer returns and use leftover CHIPS Act funds. Energy stocks, meanwhile, increased, mirroring gains in crude oil benchmarks, which surged after the U.S. sanctioned Russian oil majors Rosneft and Lukoil over the Ukraine war, leading to expectations that India will significantly reduce Russian crude imports, potentially paving the way for a U.S.-India trade agreement. The rise in crude prices negatively impacted treasuries, with yields increasing throughout the session, although there was little reaction to a soft 5-year TIPS sale. In afternoon trading, stocks received another boost following reports that Trump will meet with China's President Xi in Asia next Thursday. Additionally, the White House indicated that a meeting between U.S. President Trump and Russia's President Putin is still possible, as is a meeting between Putin and Zelensky. Trump is reportedly frustrated by the lack of concrete progress from Russia and wants to see tangible steps toward ending the war. Traders are now focusing on upcoming risk events, including U.S. CPI data on Friday, next week's Federal Reserve meeting, where money markets are pricing in a 25 bps per second rate cut, with many suggesting that the Fed may also end QT, and next week's meeting between Presidents Trump and Xi. Prior to that meeting, USTR Greer and Treasury Secretary Bessent will be in Malaysia on Friday. U.S. existing home sales. U.S. existing home sales increased by 1.5% to 4.06 million in September, matching expectations of 4.06 million, and up from 4.0 million previously. The inventory of homes for sale was 1.55 million units, representing 4.6 months' worth of supply, unchanged from the previous 4.6 months. The national median home price for existing homes rose by 2.1% year-over-year to $415,200 United States dollars. Pantheon Macroeconomics stated that the rise to a 7-month high likely reflects the impact of lower mortgage rates, noting that the 30-year rate on new mortgages was down to 6.4% by mid-September, compared to over 6.9% in early June. Pantheon suggests that the historical relationship between rates and sales indicates a significant further recovery in existing home sales in the coming months, aided by the recovery in the supply of existing homes on the market. However, the consultancy expects sales to remain below pre-COVID levels due to limited scope for further mortgage rate declines, a weak labor market, and poor affordability, with typical monthly payments at about 40% owe.